Hello and welcome to NDTV Profit. Joining us today is Mr. Anuj Kathuria. He is the India President for JK Tyre. He's speaking to us a few hours after the company declared its third quarter numbers, and if I may say so, they were a blockbuster. Net profit is up 240% year on year to 227 crore rupees. Revenue has inched up 2%, and all in the profitability has jumped 542 basis points to 14.91% as compared to the Bloomberg estimate of 12.7%. Mr. Kathuria, welcome to NDTV Profit.
Thank you for having me on the show.
That's all. Pleasures all ours, sir. First up, what explains this jump in net profit as well as the margins, sir? If you can give us some color on that.
Yeah, so happy to share that. In fact, we have been talking about it in the previous quarters as well, that we have been working continuously on our efforts on premiumization, wherein we focus to sell more of the premium products, the SKUs in which we are able to deliver better value to our customers, whether it is in the TBR segment or also in the passenger car radial segment. That is one area that we have been able to make good progress. The other is that the overall product mix has become favorable for us. When I say that, what I mean is that in our Banmore tire plant, we had taken a capacity expansion program to make more of the passenger car radial tires. That expansion program has started giving results. Almost 80% of the program is commissioned, and we have started getting the increased output from that plant. And therefore, we are able to improve our product mix towards more of the PCR segment, which is definitely a more profitable segment for us. Within that also, we are trying to sell more of the premium, the high rim size SKUs, which are the 16-inch and above. There again, we have been able to make some decent progress. As I speak, maybe in Q4, we will see more of it happening in the Banmore plant and even in our Chennai plant, which are more focused towards producing the passenger line radials. Having said that, even in our TBR segment, we have been working on certain power SKUs, which are the fuel saver, which definitely give much better value to our customers, and thereby it also helps us command a premium on those SKUs in the marketplace. We are working on extra mileage. One thing which we have seen is that many of our customers are looking for tires which are more suited for the applications that they are in, rather than just taking some generic tires. Even when it comes to the buses, a lot of tubeless radials are being seen. The demand for that is going up. On EV buses, we have been able to provide state-of-the-art products. The product that we have recently introduced, the JUXE, is specifically designed, engineered, developed, and validated for application on the EV buses. These buses require tires which are low on rolling resistance, low on noise, and at the same time are able to provide all the performance parameters, including durability. As we know that the EV buses have a high starting torque, so these also are suited for such applications. So overall, our efforts are in the direction of making products which are differentiated in performance and deliver better value, and thereby we are able to command a certain premium. This actually helps us, keeps us in good stead towards kind of meeting some of the pressures which come either from the cost side or even from the market side when it comes to the pricing of the regular SKUs.
Okay. So you have clearly elaborated on how the business is moving for you. You've highlighted premiumization, specific use case tires in both the passenger vehicle as well as the commercial vehicle sector. But what is your revenue mix then looking like? How much is the PV business contributing and how much is the CV business contributing? I'm specifying this specifically because of the fact that the SUV trend has gathered pace in the PV space. I think that's helping you. But there is some decline in the CV numbers that we have seen, the sales numbers that are coming in so far that we have seen in February so far. So how is that revenue mix for you? How much of your revenue comes from passenger vehicles and how much from commercial vehicles? And how is the EV space growing for you in percentage terms, if you can quantify that, sir?
Yeah, so thank you for the question. See, these numbers, the percentages would keep on varying month on month. But let me give you a larger picture. Earlier, we were getting almost two-thirds of our revenue from uh, the truck TBR segment, TBR and TBV put together. Now with the passenger line radial, which is the passenger car tires, also including the small commercial vehicle radials or even the light commercial, what we call as the LCV radials. So these are becoming a higher percentage. So we have seen that there has been a swing of 5 to 7% towards the what we call as the PLT range of tires. So this, in my view, would continue to be improving, and this is desirable because this has better margins. Overall volumes will definitely keep on growing in both the sides, whether it is in TBR or in the PCR. But as a percentage, I expect that going forward, the PLT range, and that is where we are adding capacities. The expansion program that we had announced in 2022 has almost materialized, and the full capacity will be in place by April of 2024. And we had announced last quarter another expansion of close to 1,000 crores, again dedicated towards the PLT range. And this would also start, will get commissioned by October of 2025. So with this, I think so the overall product mix will even improve. And this is something which is desirable.
Okay. In that respect, we also have pointed out in the statement that you put out with your earnings that the global demand scenario remains uncertain at this point of time. I think that's due to the Red Sea crisis that we are seeing. So how is your revenue split as far as import and exports is concerned? The exports, is it a big hit for you? And in terms of what is the split again? So is the raw material costs also impacting you as far as and compared to the export of tires? Please, if you can shed some light on that.
So if talking about exports, the numbers in quarter three are a little muted as compared to quarter two. But this is something which we were expecting, that there are certain headwinds in certain markets, whether it is in the US or Europe. But the good news over there is that we see signs of recovery, certain green shoots are there. We are seeing that the retail sales have picked up. The primary sales will follow, and we expect that from the coming quarter, which is in the next financial year, we should see that the demand should again come back for the TBR. We are also trying to see how we can improve our position when it comes to PCR, whether it is from the India operations or from our Mexico operations. We definitely, for us, US is a strategic market, and we would be working to see how we can get a better hold in that market. But we have been doing a lot of TBR and PCR exports into US, and once the demand picks up, in fact, that will be very helpful to get the overall numbers back. But we are not only dependent on one market, we are also present in various other international markets. In fact, we continuously are exploring further opportunities, whether it is in the Southeast Asian countries or even in the Middle East, the GCC. So there again, I think so the opportunities would be coming back. And overall, there are certain headwinds as of now because of the geopolitical situation. But I think so going forward, if things were to settle down, including the challenge at the Red Sea, although there is a challenge as of now, but it has not had a significant impact as such on us up till now. But again, this is something that we are watching very carefully, and we are trying to see how we can negate any of the challenges that this crisis will present. But definitely, what it has done till this far is that it has increased the freight rates in certain shipping lines. Also, the time required to ship out or to get the raw material in is definitely gone up. So we have to make our plans accordingly, adjust the lead times that we need to plan for such situations.
So are the raw material costs eating into your margins meaningfully? I mean, are you seeing a major impact of the rise in raw material prices?
See, the raw material prices, specifically, if I were to make a mention of it, as compared to quarter two, there has been an increase of close to 2% or 200 basis points. Although they are now holding up, maybe they will be more range bound going forward. But as we know that the natural rubber prices are volatile as of now, we are watching it very carefully. Uh, Similarly, the crude, although it is muted as of now, we will have to keep on watching that. Other than that, also the other commodities are under our radar, and we continuously keep on exploring opportunities, whether it is from our domestic sources or from international sources, how to make a good mix and a good basket wherein we should be able to get the overall mix right so that we are in a better position than the industry. So that is our effort. But having said that, we have also seen in the past that when there were situations when the raw material price increases were unprecedented and there was a challenge, but we do not expect any of that scenario to play out, at least in the near to middle term. And this is something that the industry will have to keep on watching very carefully.
So, final two questions to you, sir. You have a capex plan of about 1,100 crore for FY25. Just last month, you raised about 500 crores from a QIP. So, how do these two fit in, and what are your expansion plans given these two fund events, so to speak, sir?
Yeah, so our total capex plans, including our subsidiary Cavendish, is close to 1,400 crores, which is primarily focused towards increasing the capacity of passenger car radials as well as the truck and bus radials. Also, we are trying to expand capacities. Sorry, 1 minute. Yeah, you can edit this out, please.
Yeah, definitely, sir.
So what I was saying is that the total 1,400 crores of capex plans that we have, uh, out of that, PCR is the major focus. We are also doing a capacity expansion in one of the subsidiaries, Cavendish, for TBR, and we are also working on the all steel radial, the LTR. So this is what we are focused upon. And as far as the requirements for this, we have been working to finance these capex programs as a combination of the debt as well as the internal accruals. And I think with the the whatever plans we have and the outlook that we have, this is required. These expansion programs are necessary to keep our position in the marketplace. We are the leaders in, if all the commercial vehicle tires are put together, we are the leaders in the market, in the domestic market as of now, and we would definitely like to maintain our position over there. So therefore, and the passenger car is an opportunity. In fact, all the OEMs are also expanding their capacities. In fact, the industry is expected to double its capacity of production of passenger cars in the next 5 to 7 years. So therefore, we will also have to keep in line with that. And the replacement cycle for passenger car tires is also shortening. In fact, what we have seen is that earlier the passenger car used to go for a replacement in 3 to 4 years. And we expect that going forward with the additional annual running of the vehicles, we should see that the replacement cycle should shorten to 2 to 3 years. So this also will overall increase the demand for passenger car tires in the replacement market. So this capacity that we are putting into place, we expect that as soon as this is getting commissioned, we would be able to utilize it at the optimal levels. Today also, all the capacities that are in place in the radial space are being utilized optimally, and we expect that this would continue to be so.
So, if I want to maybe cite some, if you can maybe cite some numbers, what is your current installed capacity in India, and where do you see it expanding to, as well as abroad in your Mexico operations? So, can you just tell us how much percentage or how much you're producing now, and how much it will reach after this capex spending?
See, overall, our capacity in terms of millions of tires, it is around 34 million tires annually. And with this, including the expansion programs, we should see this going up considerably. I do not have the numbers handy as of now, but there will be an increase of 10 to 12% in the overall capacity based on the capex announcements that we have made. And therefore, we expect that this is something which, considering that the tire industry in India is expected to grow at a CAGR of 6 to 8% in the next 4 to 5 years, this will play out very well.
Thank you so much, Mr. Kathuria, for those inputs. Congratulations on the earnings once again. Thank you, viewers, for tuning in. This is Tushar for NDTV Profit.